Hello. Very good evening. I think the audio is clear. Welcome to my journal, a student of this day. I'm a student of Michael Huddleston, the ICT Trading Concept. This is my journal. I'm a student and I'm documenting my learning process. And for today, I'll be looking at the EURUSD, trading mainly the New York Open, which started at this here was 7 o'clock New York time. Then this was 7:30. Now this is New York Open at 8 o'clock, the 8 o'clock bell. Now just a slight review of how the market was, how I'd perceived it. Today was predominantly a bearish day, with the market dropping down in the London session. So we had a rally down in the London Open, 7 o'clock bell, 8 o'clock bell, 9 o'clock bell. Then at between 9 to 10, the market started consolidating, and all through here we have had mainly a consolidation. So the major levels to look out for: this was a major price level that was noted previously before they ran to the upside, and then the other levels now from the run to the downside, which include this one, and then liquidity lying above here. So by the time we were entering into the New York Open, we had liquidity initially lying to the buy side, characterized by these buy stop orders that lie below these relative equal lows, and then on the upside above here. So price also has been consolidating. We had relative equal highs here and then relative equal lows. Price came and took out these lows, so which means at that point liquidity was lying up, came and took up that liquidity, then came and obeyed this order block, this breaker here, which I do have here. And in this case, I am hoping, in case price breaks beneath this, I would take the stop loss, because that's where my trade ends at. But there is this other one. So there is liquidity lying above here. At any one point, would hope for price to move up and take off that liquidity lying above there. So I took this trade here from when price returned to this breaker here, the fair value gap of the breaker. Price returned there, I took the buy from there. It has been choppy all through, ran up, returned here. Now this is the 8 o'clock bell. Price has been running, still obeying this fair value, this inversion fair value gap. In case it breaks beneath here, it will probably, I would leave my stop loss right here, but it would probably run out this. I will leave the stop loss only if it runs to this fair value gap down here before it started to rally up. But otherwise, in case it goes below that, then it is probably a run down. As of the moment, price has respected this. It broke below this fair value gap that I thought was a breaker to the buy side initially, so we will probably not have much of that. I'll just reduce it here. So in the meantime, I am going to just observe what price would be doing, and the main emphasis is that there is liquidity lying above there. There is liquidity on the sell side. My bias for this is that it would retrace back a bit before it continues running towards the sell side during the rest of the day. I was hoping for a retracement, but it can continue. Given that it has run out these orders, it could break below here, return to a fair value gap here, and then continue running lower because it has run out some liquidity here. So depending on the willingness, it can break here, then create a fair value gap here that it can return to, and then continue running towards the sell side. So that's a possible, especially if it breaks beneath this like it has done. So it would probably change the market paradigm for this session. I will probably not touch the trade. I will accept the stop loss to be taken out like it has been, but most likely now is that the market will probably return to this fair value gap that it has created before. It can run towards the sell side now. So we'll continue to observe what the market does. It did respect this inversion fair value gap a bit, so we'll give it for that. This probably has also not, it hasn't, this fair value gap is not yet valid unless there is a more clear break down to the downside. Would probably give it to this as the fair value gap and then see how price runs and reacts around that. At this point, it means there is liquidity that is lying beneath of this, right? If I would just extend this, we would now have liquidity here just beneath this relative equal lows that would like to see price running towards. I probably wouldn't take a trade here given the uncertainty of it. The price has not obeyed this fair value gap here, so this will also close in here. In the end, it could be probable that this could have been a manipulation here before price continues running this out. My initial projection running into this was a retracement to the upside before it continues a move towards the sell side. So regardless of where it goes, I'll be monitoring for its reaction around here, and then if it continues down here, my projection is at this level here and how it reacts to the sell side here. At this point, my opinion is that liquidity lies beneath here, and then we also have right here, and price is still consolidating here. It took out this, it's chopping here. It could rally either end at this point, but from where it lies, it had taken this off, then went down. Was this could have been a breaker, but rallied above it, so it probably maybe in case anything happens, it probably could rally to the sell to the buy side first before returning towards this. This could have been a manipulation, and in this case, this could now be a target for us to run towards after we have had the retracement to the upside. I can't add a trade in there because I do not have a clear signal to use. It still clearly shows here though that this price is still being reacted off of. My trade initially here in respect to this price level was cleared out. Probably my stop loss placement should have been a bit below this, but given how this price level is being obeyed, and actually this now is acting as an inversion fair value gap, it's possible that the price could rally to the buy side. I'm tempted to take another buy trade from this place. Probably wouldn't be so wise, but I think I could probably put in one. In case price returns a bit lower, or alternatively I could wait for a signal that there is greed, or rather FOMO, that would cause me to want to put in a trade right now. The best case scenario would be to wait for a manipulation around here in order to see price going upward. Otherwise, me putting in a trade there would be, and maybe that's me maturing better, because ideally I would have put in that. So, well, regardless of whether it goes 14 and accept that. So the only way I could put in a trade is still on the reaction around here. If it gives me an opportunity where we have liquidity created down here, takes this off and then runs up, only then would I be able to take such a trade. But at this point, I do not have any such opportunity presented to me. This low was taken out. There is this other low that I am dealing with. So this one has already been taken. One that I am dealing with here, in case I'm considering